Welcome back to the channel, and thank you for joining me. I'm Algabot, and in this video we're taking a close, educational look at an expert advisor for MetaTrader 5 called median line fork reversion. This strategy is built on Alan Andrews' classic median line geometry, a sloped channel drawn from 3 swing pivots. Instead of chasing breakouts, it's a mean reversion approach that fades price from the outer rails of that channel back toward its center line. By the end, you'll understand how the fork is built, how entries and exits are defined, and how the code expresses it all. Let's get started. So what exactly does this expert advisor do? At its heart, median line fork reversion is a mean reversion strategy. Rather than using the horizontal boundaries of a Donchian channel or the straight line fit of a regression channel, it constructs a sloped channel from 3 discrete swing pivots, the building blocks of Alan Andrews' median line, often called the Andrews pitchfork. Here's the idea in simple terms. The strategy continuously tracks a zigzag of alternating swing highs and lows using a fractal pivot test. It takes the 3 most recent alternating pivots and draws a central median line, along with 2 parallel outer lines called tines. The median line always sits exactly halfway between the 2 tines, which makes it a natural target to aim for. The approach leans on an observation Andrews described many years ago, that after price reacts away from a well-formed median line, it tends to return to that line the large majority of the time. This is sometimes referred to as the 80% rule. The strategy uses that tendency as its educational premise. Fade the outer rails and target the center. Because everything is defined on a single time frame, the expert advisor runs on whatever chart period you select at test time, whether that's a 15-minute, 1-hour, or 4-hour chart. It's designed for a range of instruments, and the illustrations in this video use the euro-dollar as an example. Who is this style suited to from an educational standpoint? It's likely to interest traders who are curious about counter-trend and mean reversion concepts, and who appreciate structure-based tools rather than simple horizontal levels. As always, this is information for learning only. Trading carries real risk, and losses are a normal part of any approach. Let's move on to the mechanics. Let's break down exactly how the expert advisor makes its decisions step by step. First, it maintains a running list of swing pivots. A bar qualifies as a pivot when it is the strict highest high or the strict lowest low within a window set by the PivotLookback parameter, which defaults to 3 bars on each side. These pivots are folded into an alternating sequence of highs and lows, so the strategy always has a clean zigzag to work with. From the 3 most recent alternating pivots, call them P0, P1, and P2, the strategy builds the fork. The median line starts at the oldest pivot and runs through the midpoint of the segment connecting the 2 newer pivots. Its slope comes from those points. 2 parallel tines are then drawn through the 2 newer pivots, giving an upper rail and a lower rail, with the median line sitting exactly in the middle. Now the entries. For a long setup, the strategy signals when a completed bar sags down to or below the lower tine, and then closes back up compared with the prior bar's close. That combination, reaching the rail but closing higher, is read as a rejection of the lower rail. The strategy also checks that the median line sits a worthwhile distance above the current market before acting. When those conditions line up, it places a buy, aiming for the median line as the take profit. The short setup is the mirror image. The strategy signals when a completed bar pushes up to or above the upper tine, and then closes back down versus the prior close, a rejection of the upper rail, with the median line a worthwhile distance below. When that aligns, it places a sell, again targeting the median line. Risk management is built in. The protective stop is placed a multiple of the average true range beyond the entry, set by the AtrStop multiplier, which defaults to 1.5. The take profit is always the dynamic median line. A minimum room filter of half the ATR skips channels that are too thin to be worth fading. A maximum fork age of 120 bars keeps the strategy from fading a stale fork whose pivots are ancient. And only 1 position per magic number is held at a time. Let's look at the actual MQL5 code the expert advisor runs, as you'd see it in MetaEditor. At the top are the input parameters. PivotLookback, defaulting to 3, sets the fractal half-width for detecting swing pivots. ATR period, defaulting to 14, drives both the stop distance and the minimum room filter. AtrStopMultiplier, at 1.5 scales the protective stop. MaxForkAge at 120 limits how old a fork can be, and lots sets the order volume. Next, the strategy projects the fork onto the current bar. The median value is computed from the oldest pivot and the slope. The upper tine and lower tine are simply the higher and lower of the two projected parallel lines. Minimum room is set to half the current ATR. Now the two signal blocks. The long block reads, if the completed close is at or below the lower tine, and that close is above the prior close, and the median is a worthwhile distance above the ask, then the expert advisor calls enter with a buy. Notice the stop is the ask minus the ATR stop multiple times ATR, and the take profit is the median. The short block is the mirror. If the completed close is at or above the upper tine and below the prior close, and the median is a worthwhile distance below the bid, it calls enter with a sell. Here the stop is the bid plus the ATR stop multiple times ATR, and again the take profit is the median. Finally, the enter function normalizes the stop and target, then calls trade.buy or trade.sell with those levels. That's the whole decision, expressed compactly. Let's bring the whole strategy to life with a chart. On screen you can see a series of euro-dollar candles, and drawn over them are the three lines of the median line fork. The two outer blue lines are the tines, the upper rail and the lower rail, and the gold line running through the middle is the median line, our reversion target. Notice how all three slope gently upward together and stay perfectly parallel, because that's exactly how Andrew's geometry defines them. Watch the opening candles. Price begins in the middle of the channel and drifts steadily lower, bar after bar, pulling away from the median and heading down toward the lower rail. Each candle closes beneath the last, so momentum is clearly to the downside as the market approaches the lower tine. Then comes the key moment for the long setup. One candle sags all the way down and pierces below the lower rail, closing beneath it. Price has stretched away from fair value. On the very next candle, the market turns. That candle dips to the rail but closes back up, higher than the prior candle's close. This is precisely the condition the strategy is watching for, a completed bar reaching or breaching the lower tine, then closing back up in rejection of it. With the median line sitting a worthwhile distance above, the buy entry marker appears. The protective stop is placed a multiple of the ATR below, just beyond the low, while the take profit is set at the median line above. Now follow the payoff for that setup. Over the next few candles, price lifts off the lower rail and climbs back toward the center of the channel. Green candle follows green candle, each closing higher, until price reaches the median line. That's where the take profit marker sits, and the long idea is complete. A classic fade from the outer rail back to the middle, just as the 80% rule describes. But the move doesn't stop at the median. Price keeps pushing higher, candle after candle, now traveling from the center of the channel up toward the upper rail. This sets the stage for the mirror image short setup on the other side of the fork. Watch closely. One candle drives all the way up and pushes above the upper tine, closing above it. Price has now stretched too far to the upside. On the following candle, the market rejects that rail. That candle reaches up to the upper tine, but closes back down, lower than the prior candle's close. This is exactly the short condition the strategy looks for, a completed bar at or above the upper tine, then closing back down. With the median line now sitting a worthwhile distance below, the sell entry marker appears. This time the protective stop is placed a multiple of the ATR above the rail, and the take profit is set back down at the median line. Then the reversion plays out once more. Price rolls over from the upper rail and works its way back down through the channel, candle after candle, until it returns to the median line, where the second take profit marker sits. The short idea is complete. Again, a fade from an outer rail back to the center. Step back and look at the symmetry. Both trades use the same simple recipe. Wait for price to stretch to an outer rail of the fork. Wait for the completed bar to close back in the other direction as a sign of rejection, and then aim for the median line in the middle. The stop is always an ATR-based distance beyond the rail, which defines the risk, while the median is the reward target. The minimum room filter of half an ATR and the maximum fork age of 120 bars quietly keep the strategy from taking setups where the channel is too thin or the pivot's too old. It's a clean, structured way to think about mean reversion. And remember, in real markets, not every setup reaches its target, and losses are a normal part of the process. That brings us to the end of our educational walkthrough of the median line fork reversion expert advisor. We covered how the fork is built from 3 alternating swing pivots, how the median line and its 2 tines define a slope channel, and how the strategy fades the outer rails back toward the center with an ATR-based stop and the median line as its target. We also read through the actual MQL5 code that makes those decisions. Remember, everything in this video is for educational purposes only. It is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please give the video a like, leave a comment with any strategies you'd like me to break down next, and subscribe so you don't miss future MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.